Hello everybody, this video is entitled MSTR stock, the preferreds are resting, boring buy today, rather a boring price action for Bitcoin as well. I'll get to that in a second. So yeah, not gonna lie, this end of year is kind of boring. He bought $108 million worth of Bitcoin. So I was excited yesterday, expecting a 25% yield, but I overlooked the fact that, yeah, we were stacking cash last week, so the week prior to this, the week prior to last week, actually, now that we're in the new week, we were stacking cash, and so that messed up the calculation. We actually, because of that cash stacking, we actually ended up at 23.2% yield and not 25%. So we got a baby buy. You know, I guess we could have been hopeful that he could have, bought much more and maybe reach the 25%, but we didn't quite get there. Yeah, it's boring. Yeah, nothing, not gonna lie, but it's like, it all doesn't matter how I feel about short-term developments. Short-term doesn't matter at all. The only thing that matters is the long run. And over the long run, the thesis remains the same, which is we are waiting for stretch to rise. That's all we're doing. We have the plan. We just have to have some patience, and we have to wait for stretch to rise. This is also why he has not ATM'd any of the preferred. I think he wants that collateral to remain high, but to remain pristine, to help stretch get back to 100. The less of stride, the less of your preferred you issue, the higher the BTC rating you're going to have for stretch. And I think he wants to prioritize that BTC rating in order to have stretch go right back to 100. We're at 99.15. Once we get I think we'll likely get a slight yield increase in January. Once we get that, we should get closer to 100. We will eventually get to 100 at the very least when a new Fed chair comes in. That's the thesis right now. It's all about patience. And sure, if you measure the performance of strategy over a 1 year period, it has been so disappointing. But we are not measuring strategy over a 1 year period. We are measuring it over, at the very least 5 years, at the very least half a decade. And yeah, most of that money for the buy today was acquired via the ATM at a 0.18. So it's technically accretive, but it's not that exciting. It's not very juicy yield. I mean, at 1.08, yeah, you're selling $1 for $1.08. Nothing very much exciting. What is even less exciting and so boring, and I'm adjusting to my European time zone here. I am over here for the next 10 days. So adjusting to that, kind of gives you a better sense of that manipulation, because I actually woke up this morning seeing Bitcoin at 90K, and I was like, oh, this is so great. And then you spend your entire day in Europe seeing the manipulation going on. This, I mean, without fail, from Sunday to Monday for the past 3 months, we pump on what in the US would be a Sunday night, and then we drop by the morning, and without fail we had that chart pattern which repeats itself over time, which is all manipulation, right? On Monday morning in Asia, right, you have people buying a bunch of Bitcoin and then selling it right off into the U.S. market, and yeah, that's boring. It's always the same until it's not, right? This is the same until it's not. At some point, this pattern will break. This is not the first time we see Bitcoin behave like a stable coin. You may remember February of last year, we also saw that behavior like a stable coin. I think in order for the market to return back to highs, we need the bullish sentiment to come back. As I highlighted in my video yesterday, the correlation is uncanny. If you look at the price of Bitcoin and you look at the chart of the crypto fear and greed index, it's literally almost the same chart. We are in fear territory, and the fact that the next 3 days, are kind of end of year tax loss selling, depending on how people own the Bitcoin, depending on the jurisdiction, depending on whether MSTR is held in a taxable account or not, we may still see some of that selling pressure, some of that weakness. But then again, you have CNBC trying to make sense of the nonsense. CNBC is like, oh, people are taking their gains on tech stocks this year, referring to Tesla selling off today, for example, and some of our big tech names. My viewpoint, and and this is where I'll conclude this video, and is that there's two worlds people live in. There's the world of media. There's the world, I mean, I guess even on YouTube, there's the world of clicks where you gotta get a click. So this world is very, very short term. The information expires fast, and so you have to make money with information, and so you have to create the buzz, and you have to create the FUD, depending on the piece of information. That's what they do, and me, I don't do that. I don't focus on the current thing, right? The current thing right now is people, as of this morning, celebrating GM. Oh, GM is winning, and they're laughing, and they're saying GM is beating Tesla, and people celebrating silver. Silver actually taking a dip today. It was overbought, in my view, very much so, very much overbought. That's the world they live in. You live in the moment, you live in the action, you want the piece of news that's going to get you the clicks. This is the world I live in. This is the world of data that makes sense over the long run. This is Tesla versus General Motors. Tesla in 15 years, 43% average annual return. GM, 8%. GM has done worse than the indices, even though it looks so good this year. GM was $34 in 2010, right? So no performance whatsoever. 8%. That's well under the rate of money growth, well under inflation. And if you look at silver is a little better over a 10-year period, a little better, 15% ARR. This is good. This is in line with the S&P, or a little less than the Nasdaq, but roughly in line with how well the S&P has done over that period. But again, silver compared to Bitcoin, or gold compared to Bitcoin, we live in a different world. I don't live in the same world as commentators. This is not the same world, because in my view, if I look at GBTC, proxy for Bitcoin, versus silver, that's a silver ETF, by the way, you're looking at, let's round it up to 59, you're looking at 59% ARR over the past 10 years for Bitcoin, versus only 15% for silver, which is good. It's better than GM, but it's nothing like Bitcoin. It's not digital gold. It's silver. So anyways, the world they live in, the world I live in, and the same is true for strategy, right? Strategy is not doing very well this year. I don't know what it's going to do in 2026. I can't know when strategy is going to do well. I know I don't. I know I have plenty of time to see Bitcoin and strategy recover. And in my view, they inevitably will. And so, yeah, we have a boring day today for strategy. So anyways, and I expect the next few days to be boring as people adjust their portfolio for the new year. So this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.